Welcome, dear traders. You are watching a recap of the Asian session on August 21. In Asia, stock markets show cautious trading on a Monday against the background of the decision of the Chinese financial authorities and in anticipation of the speeches of the world's central banks in Jackson Hole. The shares of the antipodean countries are falling. Japan is the only exception to the general trend. In addition, almost all sectors participated in today's gains, with the Nikkei index up about 1% early Monday. While the stock market of the world's third largest economy is showing optimism, the Chinese economy is looking depressed. China's economy continues to lose momentum due to a slump in the real estate market, slowing consumer spending, and the rising youth unemployment. The authorities have taken measures to combat these problems, but have not succeeded yet, taking into account that these were mostly verbal interventions. Over the weekend, the Chinese authorities made another such attempt, calling on the country's banks to increase lending. Even before that, top officials had promised to increase liquidity amid the yuan's deflationary outlook and weak trade figures. At the same time, the People's Bank of China made a rather controversial decision today. It lowered its benchmark annual lending rate to a record low of 3.45%. Meanwhile, the 5-year rate was left unchanged, although it's the one that directly affects the level of mortgage loans. This rate hike increases demand for loans and supports the real estate sector. The People's Bank of China is trying to balance a crippling economy and a weak yuan. Nevertheless, the Chinese authorities have not succeeded yet. Today, in Asian trading, the yuan dropped, dragging down the currencies of antipodean countries. Stocks of the Shanghai Exchange fell to an 8-month low. Swiss financial holding company UBS downgraded its 2023 growth forecast for China's economy and currency, and the US dollar had a bearish start in the Asian session. Its rate against the 6 of its counterparts was very volatile, moving in the red range of 103.30 and 103.50 points. Last week, the greenback outperformed the yen and gained more than 1% against the antipodean currencies. Its growth was also supported by the US Treasury yields, which jumped on the prospect of a longer Fed rate hike. It seems that US dollar bulls are running out of steam after 5 weeks of gains. There are no major reports from the US today, and the Jackson Hole symposium is still a few days away. Therefore, the greenback began to consolidate near 103.20 ahead of the European trading session. In addition, the interventions of the Chinese authorities in the currency market could be the reason for the fall of the greenback today in Asia. This year, the Chinese government has sold US dollars every month except for March. It's likely that China will continue to sell the US currency to support the liquidity of the yuan, as it does not tolerate the weaker yuan and owns more than $800 billion of the US government debt. It seems that the Japanese yen should have appreciated the balance of forces in the forex market today. As we noted in our previous review, China's intervention against the US dollar is also in favor of the Japanese currency. As seen on the chart, that plan failed today. Despite the fall of the greenback, the dollar-yen pair is not declining. The fact is that the Chinese authorities' efforts to support the economy and given a boost to oil and commodity prices. For export-dependent Japan, that adds pressure on its weak currency. As a result, the yen was still trading within the range of 145.10 and 145.60 early Monday. awaiting possible intervention from the Japanese authorities. On the other hand, if even the head of the Bank of Japan has any important news, it will be voiced in his speech in Jackson Hole. In addition, the yen has been trading in the risk zone for several weeks. Therefore, in the remaining days before the opening of the summit in Jackson Hole, the markets may be waiting for important decisions. Today, the dollar-yen pair interrupted the two-day decline. It looks like consolidation in the area of 145 and 40. The Aussie dollar pair is trading within a narrow range of 0.6392 and 0.6419. Meanwhile, the interest rate cut by the People's Bank of China did not give the Aussie a boost against the US dollar. On the other hand, the greenback is supported by the still hawkish outlook of the US Federal Reserve, and for the Aussie, the outlook of the country's central bank does not promise any support. Last Thursday, Australia released disappointing employment data. The weak indicators confirmed the regulator's decision to leave the key interest rate unchanged in September. As a result, the Australian dollar closed Monday's Asian session on the downside near the psychological level of 0.6400. The New Zealand pair is falling along with the US stock market. The New Zealand economy is in a technical recession and is weakening amid a negative outlook for China, New Zealand's main trading partner in the region. As a result, the Kiwi continues its losing streak. In Monday's early trading, the currency was hovering in the range of 0.5906 and 0.5938. The Kiwi was trading near its early low reached on a Friday and closed the Asian session at 0.5920. And that's all for now. Leave your comments down below and don't miss our next video review. Remember that staying up to date is the key to success in trading, and see you online soon.